There has been this critique that Islamic investing is dedicated for Muslim only, is too complicated, can be costly, and due to the screening for equity investing, the restricted investable universe will cause a performance drag. And then investors are also not convinced with the track record of Islamic investing. There is also this critique that there is not enough expertise and not enough investment product. It's not scalable enough. There is no hedging. And lastly, there's this critique that there is poor liquidity in Islamic investment products. Now, all this is actually a myth. It is a misconception due to lack of education and lack of awareness. Now, the truth really is Islamic investment product is for everyone. It should be treated the same with conventional, with only one difference, and that is the screening process. It is definitely not complicated, and it is offered to investors at the same cost as the conventional. There is scalable products internationally. In fact, if you talk about mutual funds, there is close to about 800 mutual funds internationally. And that mutual fund covers all asset classes ranging from sukuk, equity, balanced, money market Islamic, private equity, property, even hedge funds Islamic. Now, as for the misconception on track record, what is the performance really? Now, Islamic investment product grants comparable risk return with the conventional on a long-term basis. Just case in point, as an asset manager, it is very difficult for us to manage funds or portfolio in the current market, especially the last 6 years. It's the most difficult is to manage when market is volatile like this and when market goes into a downtrending process. However, the last 6 years, there has been so many black swans happening. There were the inflationary fears, there was the mortgage credit crisis in the United States, there was the financial global crisis, and then there was the Dubai property crisis. It was then followed by the tsunami in Japan, and it was also followed by the sovereign debt crisis in the Eurozone, and then the Middle East, North Africa, and now the sovereign debt crisis has come back and haunt us, resulting in a European financial crisis. Now, all this has resulted in Islamic investment product being tested into seeing whether this volatility is an opportunity or is it a challenge, whether it's a friend or whether it's a foe. Really, we look at it as a friend. We look at this whole situation as the glass is half full. Case in point, in that 6 years, say from May 2006 to November 2011, in that 6 years period, if I think that's, 6 years period, if I look at the cumulative performance of a conventional versus an Islamic equity, just take a global capability. So we should compare Dow Jones Islamic Market World with Dow Jones Global, the conventional side. In that period of May 2006 and November 2011, the Islamic index showed a cumulative performance of 14.24%, whereas the conventional showed a negative of 2.3%. So there is actually an outperformance by the Islamic in that 6 years period during that volatile times, with all those black swans happening that impacted the market. The outperformance of the Islamic over the conventional is a positive 16.54%. So why is Islamic investment portfolio performing better than the conventional in the last 6 years? The reason behind it is because of the screening process. The first level of screening process, where they screen the permissible by excluding for social reason, and by excluding what is doctrinated in the Quran, by excluding riba, excluding pornography, pork, weaponry, and all those. It is the second screening process that is actually granting that benefit to investing in an Islamic investment product. The financial screening, which is the second layer of screening for investing in an equity Islamic portfolio, is a methodology that establishes more stable and less volatile portfolio. This portfolio will favor lower leverage companies that doesn't have high debt, and this portfolio will also deploy capital productively. So the rigorous screening process, which takes away company with high leverage, takes away company with high receivable, and takes away company with non-productive cash, basically provides a risk overlay at the portfolio level itself. And this ensures the ability to meet both short-term as well as long-term obligation of the company we're investing in. I have been talking on the benefits of investing in an Islamic equity portfolio. In summary, the benefits of investing in an equity portfolio is basically it grants comparable risk return to the conventional. It is less volatile than the conventional. As a result of the financial ratio screening, there is a quantitative overlay of risk management at the portfolio level itself. And on top of all this, it is actually for a social cause. So really, it is responsible investing, and it is ethical as well. I have not touched on the benefits of investing in a sukuk asset class, but I thought I'll just summarize quickly the benefits of investing in a sukuk asset class. Investing in a sukuk asset class also grants the same risk return compared to a conventional bond portfolio. Secondly, it is asset-based. And thirdly, there is a risk overlay on the sukuk portfolio itself, where you, as investor, is the beneficial owner. You have beneficial ownership, but no legal ownership, but you do have direct recourse to the issuer. And on top of all this, the proceeds of the sukuk is used for more productive economic activities and used for social activities. So that itself is, I think, really compelling for those who are not educated and is not aware of the benefits of investing in a sukuk asset class. So having covered the quantitative and the technical comments on performance on Islamic investing, allow me just to tickle you and share with you on the size of the industry. How large is the Islamic investment industry, and what is the potential? We can split it into retail and high net worth, and also institutional investors. Simplistically put, for retail and high net worth, there is a potential of 400 billion US dollars. But is 400 billion US dollars large? It depends from where you come from. If you compare to the amount of reconstruction cost Japanese spent on the tsunami of 300 billion US dollars, this might be large. But if you compare to the 800 billion US dollars that was lost in the Lehman Brothers debacle, the 400 billion might be small. But nevertheless, there is 400 billion potential for high net worth, ultra high net worth, as well as the retail. On the institutional side, there is the pension houses, there is the sovereign wealth funds, there are also various central banks in the Islamic countries who are also keen to invest in Islamic portfolio. If we just combined 3 sovereign wealth funds, ADIA, Abu Dhabi is Investment Authority, SAMA, Saudi Arabia Monetary Authority, and just the QIA, Qatar Investment Authority. If you combine just these 3, the asset under management of these 3 comprised of a large 30% of the total sovereign wealth fund of the world. So how do we link CIMB Principal Islamic with this demand and with this investment performance? CIMB Principal Islamic started its first institutional mandate in 2009 August, and that was like 3.5 years ago. At the end of July, which is this month, July 2012, we are very happy to share the good news with you. We will be joining the Billionaire Club. Our asset under management will, inshallah, reach US 1 billion US dollars, and this is Islamic asset under management. These are largely contributed by institutional mandates from sophisticated investors like Southeast Asian Central Bank and Southeast Asian pension houses. If I split between global equity and global sukuk, I have about 500 million US dollars in global sukuk, and the balance is in equity. But now, if we look at the industry is still plateauing its asset under management in the fund industry of only 60 billion US dollars. Now, why is this so? There has been a lot of articulation in so many conferences and seminars encouraging asset managers to speed up the global traction, to internationalize their Islamic investment prowessness and Islamic investment products. So as managers and as Islamic asset management company, they should actually move away from establishing funds which is in the domestic sandbox. They should start establishing funds using the global platform, the like of Dublin, the like of Luxembourg. These provide a very robust global risk framework under the UCITS compliant framework, which meets the European standard under the MiFID standard. And this will allow distribution to be internationalized. As such, asset managers need not have to be distributing funds which is just in their own jurisdiction, for example, just a Saudi fund if you're a Saudi asset manager, or just a Malaysian fund if it's a Malaysian asset manager. Now you're able to actually internationalize your fund, and you would be able to capture investors in London, investors in Geneva, investors in Germany, and investors in the GCC and Asia. In CIMB Principal Islamic Asset Management case, for example, we have initiated to internationalize our investment capabilities and put these capabilities on a shop window in Dublin by coming up with 3 Islamic equity funds. Number 1 is Islamic Global Emerging Market. Second is Islamic Asia Pacific ex Japan, and the third is Islamic ASEAN Fund. All these 3 are Islamic UCITS UCITS compliant fund registered in Dublin, and it is distributable and offered internationally to meet the demand of the international investors.